Today we are going to look at a Reader's Choice stock. I'm Jill Malandrino with the Streets Options Profits.
And I'm Scott Redler, Chief Strategic Officer of T3Live.com.
In our weekly chat forum on Options Profits, a reader wrote in asking for us to take a look at OXY, which is interesting because they report on April 26th, but they wanted to see my take and Scott's take into the charts. Going into earnings, we typically don't play earnings on Options Profits, but there could be some opportunity here for more later dated play. So let's take...
At this point, I think a lot of people are disappointed with the group overall. You know, it bottomed early August and had a nice uptrend, but then it did change and gave you a few signs to get out of the way. If you look at the chart here of OXY, you will see, if you look back at this, potent low that came into play, back in August, you had a fast, furious move that typically leads to more action. Corrected, made a lower high, corrected, but it held this 85 level. Here's when it broke this mini downtrend, came up to the peak here, and the peak actually happened, I think, what's the day here? The peak happened back in February, well before the market obviously peaked, and then once it broke this trend line, that's why I pay attention to trend lines, you kind of had to get out of the way. And then since then, you had your high, a lower high, lower high, lower high, and now it's coming into big support again. It's coming back into that 85 that held way back when. It's below all the moving averages. So technically, I don't think the street's expecting much from the report. So I think if they just even come in line, it could get a bounce. So if you're like a long-term OXY fan, maybe being some into this 85 area, but be prepared that if it's a disappointment, you're probably going to have to hold your nose and wait a little while to better auction in this group, maybe towards the end of the year.
Well, one of the issues are that we had ConocoPhillips come out, and they didn't report that well. Production assets is really an issue there, and that's going to be key among the group. Also on Thursday, we have ExxonMobil, we have Chevron. There's a lot of headline risk coming into the names this month. What we are going to take a look at is what's called a calendar spread, and we're later dated one. Shorting November, going long January 2013. To fund that short, so you have 100% controlled risk. Your only issue there is just to make sure that your short side doesn't get exercised, and if it does, we go ahead and we adjust from there. So even, before we end the video, let's take a look at ExxonMobil, because that's a name that we get a lot of questions on as well.
Well, ExxonMobil, if you look at it here, it's just not ready to go, but it's acting much better. Like you saw how that last stock was under all the moving averages. It's still above the 200. It's still above the prior breakout of around 82. You have a nice long channel, so stocks, changing hands. This is definitely a leader that people like. If you look on a short-term level, it did respond yesterday to the market. It was green when the market was red. If you look right here, you have a small little pivot. So if this were to start to get above this 85.93, I think some guys might take it for a trade long. And then obviously the major resistance is right around 88. So that's the line to deal with moving forward.
I think what's really interesting with the oil names is that they're not being bid up too much or sold too much into the print. So it's kind of like a wait and see, like we're seeing with the overall market. So
yeah, you have to have a thesis to be long them because the action hasn't been warranting it yet.
Okay, all right, great. Thanks, Scott.